I see people are showing up to this webcast hosted by Impact, here to assist our contractors and our local unions and district councils in availing themselves of the funds that are so desperately needed to allow us to sustain our business and go on. I'm Kevin Hilton. I'm the CEO of Impact. And before we kick off here, I just wanted to express my personal and I think the gratitude of the group at hand at how impressed we are with the people who have responded in this emergency, be it first responders, nurses, physicians. They're just incredible, and I know everybody appreciates them very much. So, it reminds me of the great quote from de Tocqueville, who traveled far and wide in America, and he wrote, "America is a great nation because it is a good nation." And all the people coming together, helping out your neighbors, contractors, iron workers pulling together to make this happen. It really shows you what a great, great nation we are, and know well that we're going to get through this and be highly successful coming out of it. But in these troubling times, we're relying on government funding to help us keep afloat. There's a good article in the Wall Street Journal this morning, and I'm just going to read a couple of quick quotes here. It says, the SBA said nearly 4 million businesses have applied for funding under this program, seeking $383 billion, while Congress has allocated less than $17 billion. So that's certainly something to keep in mind. And then there's a second quote from Richard Hunt, the chief executive of the Consumer Bankers Association. And he says, quote, "A week into the program, there's still a lack of clarity and conflicting guidance." Well, that's the reason we're having this webcast today. So with that, we have a couple of subject matter experts, as much as anybody can be a subject matter expert in something this new to all of us. First of all, we have Matt Lesko, president of Lesko and Walderman, a firm specializing in accounting for small businesses, and also Pat Carroll, the CEO of Obsidian, a firm specializing in business planning solutions. And as I mentioned, and is evidenced by those quotes I just read, the reality is the guidance and rules being provided by various government agencies are literally changing hour by hour. And that's why we have Matt and Pat monitoring this very closely on your behalf. We want to get the latest and greatest assistance to our contractors and our local unions, knowing that change is going to continue. And we're going to keep changing, but we're going to supply you with as much information as we possibly can in real time. And before we get into this, and I turn it over to Matt and Pat, I would ask you to use the Q&A function found at the bottom of your screen to ask questions. I know a number of people who responded to the survey asked questions. I'll have those up on my screen, and I'll pass them along to Matt and Pat. But if you have questions as they come up, we will also be monitoring the Q&A function that you can type in those questions on the bottom of your screen, and I'll read them off. We've budgeted 2 hours. We'll get through this as best as we can. And keep in mind, based on your questions and the ongoing changes to the legislation and the guidance offered by the government, we will be planning webinars or webcasts next week where we will get into the very specific tactics and means of making your application, regardless of which government program you're going to apply to, more effective, and therefore increase the chances that you're going to be highly, highly successful. So with that, I will turn it over to Matt and Pat. Take the floor, please, Matt.
Thank you, Kevin. Let me start off by reading something our attorneys asked us to read before we started. So just bear with me, because so let me read this verbatim. This presentation has been prepared by Overture Holdings as affiliated companies for current general information purposes only, and not professional advice in relation to seeking economic relief under the Coronavirus Relief and Economic Security Act of 2020. While reasonable efforts have been made to verify the information, it should be understood that due to the fluidity of the requirements in the interpretation of the CARES Act, information presented may change, and let me add to that, will change. So no representation or warranty about the accuracy or suitability of the information for your particular situation is being made. And let me emphasize that we know a lot of the information here is accurate, but you have to look very carefully at your particular situation. And as Kevin said, we'll be here doing more presentations in the coming weeks and addressing much more particular about each individual's situation. I'm going to briefly go over the formal list of what we're going to do. So Matt will be talking about the Paycheck Protection Program, known as the PPP. If you've heard that thrown around, it actually is a Paycheck Protection Program. I'm going to be speaking about something I noticed that not many people have taken advantage of based on the survey results. It's the Economic Injury Disaster Program. And I will also touch a little bit on some of the changes made in retirement plan legislation. Matt's going to then take over and talk about the Employee Retention Tax Credit Program. And then Kevin will take over and direct questions to Matt and I as is appropriate. So with that, Matt, go ahead and kick off the presentation with the Paycheck Protection Program.
Thank you, Pat, and thank you, Kevin. Before I jump in that, I'll do my informal disclosure for Pat, which is this is an 800-page act that passed, and the guidance that continues to come out from the SBA is being piecemealed to the entirety of the banking industry as well as us professionals, and that's why it's so important for everybody to understand that we're working with the information that we have at the current time. So I just want to make it simple. I want to highlight a couple things from the survey before I jump into the Paycheck Protection Plan. I think one of the things that is really important is that 50% of the people that responded said they haven't even started their application yet. And 78, a little bit under 78% are really looking at both how do I retain my employees and how do I keep my doors open, which is really important from a business perspective and a goals perspective. And so from our position, the reason we had the survey is to understand what's most important to you. Where I believe the meat and potatoes of this presentation falls in is really your questions on us providing answers as best as we can. So we're going to try to be succinct with the overview of these programs and focus more on the Q&A side. With that said, let me jump right into the Payroll Protection Program. The Payroll Protection Program is a newly established loan program through the SBA that is delivered by the banks. And it was under the CARES Act. Everybody talks about the CARES Act. The CARES Act has numerous programs for small businesses, for big business. This is one of those programs. This loan is partially forgivable based on your retention of employees and the maintenance or maintaining of the level of salaries. It has a specific period that it covers, February 15th through June 30th when it comes to that period of support. And that's going to be important into some of the things that Pat talks about, the economic injury disaster loan, of what periods we're looking at when we're trying to utilize these different programs. And in the forgivable portion, you will do your calculations based on an 8-week period starting the day you receive the funds. Some basic information: who's eligible for the payroll protection program and loan. It's small businesses as defined as employers of 500 or less employees, 501c3s, which is not important here, but I just want to mention it, but not 501c6s, and then independent contractors. There's one piece here: independent contractors or sole proprietors is not something that we're really going to be focused in this conversation. Both myself and Pat are very knowledgeable on the business side, or businesses that have employees. And the independent contractor side has a whole other set of guidelines. We do have people that are familiar with it, but we're not really going to focus on that when it comes to today's conversation. There are some keys to understand when it comes to the Paycheck Protection Plan. One is it's a max loan per entity of 10 million. However, it's a calculation. So even though I say 10 million doesn't mean you're gonna get 10 million. It means that's the max loan available to you. The loan amount is equal to 2.5 times your monthly payroll. This is still somewhat general in the sense of what makes up my payroll costs, per the loan program. And without getting into the nitty gritty, I'm going to try to make it really simple. Your payroll costs consist of your gross wages, your employer paid state taxes, such as unemployment, and your employer paid benefits. When I say benefits, it can be health, dental, vision. For you guys, the union benefits, yes, retirement and so forth. We take this and we look at it from an average. So take 2019 for the full year, calculate the total payroll costs, divide by 12, and multiply by 2.5. That's how the loan calculation is derived at this point. There's been, since this act was passed, a bunch of confusion as to what the calculation was. This seems to be pretty defined at this point. I can't say there won't be changes, but the guidance and guidelines have been made more clear for the banks. The forgiveness will be for the payroll costs as described, just described, as well as costs associated to interest on mortgages, rent, utilities, and then interest on other debt. For some of those here, that could be interest on equipment financing that you're doing currently. And the other piece of this is that the loan, the portion that's not forgiven, if there is a part that is not forgiven, is a 2-year term loan at 1%. That's a lot of information I just threw at you at one time, and I don't expect you guys to, or everybody to know all of that going forward, because it is a calculation. There's a lot of tools available to do that calculation. Many payroll companies, if you're using Paychecks, if you're using ADP, if you have a PEO or what's called a professional employment organization, actually have developed reporting right in their systems to provide you this calculation. QuickBooks has also done that. Starting as of Wednesday of this week, they're providing a calculation tool within their systems. So you don't have to know the calculation to get it done. You can go to the resources you already have if you have them. There's some questions on how to apply. This is not something that you apply directly to the Small Business Administration or SBA. This is you're applying through your lender, through your bank, and specifically the bank that you have your business relationship with. The banks have been giving guidance from the SBA that the SBA prefers that they only do applications for businesses that they currently have relationships for. Now, that guidance is not a rule. So there are banks that are opening themselves up to non-clients, but in general, the bank that you bank with currently is the bank you should be going to. If you want to do any research and you haven't, you can find the actual application on the SBA website. If you search online for SBA PPP or Paycheck Protection Program, you will find the application right there. And then the big question is who should apply? And in general, if you meet the eligibility requirements, if you have had payroll and W-2s, if you meet those requirements, you should apply. There's no reason you shouldn't apply at this point. And the last piece I want to talk about is on the forgiveness. A lot of people have questions on how that forgiveness is going to be calculated. And I'm not going to go too much into that today because in my reading of what's going on, I believe there's a lot of gray area. And I'm not sure that we've gotten the full guidance as how the SBA is going to calculate that forgiveness. We know it's an 8-week period after you get the funds. We know what type of expenses can be made as forgiveness. But I think there is a potential of having some carve-outs that we're not aware of at this point. And then the forgiveness also has a component that says if you don't retain the head count of employees or you reduce salaries by more than X dollars, that can affect the forgiveness as well. And that has a pretty major impact from that perspective. So that's my quick overview of the Payroll Protection Program. I'm going to pass this back to Pat to talk about the economic injury disaster loan.
And before Pat jumps in, I should have mentioned this at the beginning. This is going to be recorded. You know, what Matt just went through is a mouthful to say the very least. It'll be recorded and be uploaded to the Impact website. We can upload it to the Ironworker website tonight as well. And just while I'm on the mic here, and before you guys sign off, I want you to speak to what you learned relative to training facilities and those facilities that train for safety. We have over 150 training centers in North America. All of them train in safety. So whether you want to do that now or later, that's great. And
I'd like to throw in, we're going to be looking at, as Kevin and Pat alluded to, is follow-up webinars. And those webinars may include things like how to fill out the application, how to calculate your payroll costs, and items like that. And that's why I want to give the overview. It was a mouthful. We're also planning on putting together a support email for questions to be answered, and we'll talk about that later, but that will be after we go through the webinars and so forth. Impact is really invested in the support around this for you as member companies.
Okay, thank you, Matt, Kevin. Before I jump into speaking about the business EIDL, the Economic Injury Disaster Loan, let me quickly touch on some interesting ways that the CARES Act has affected retirement plans and where it may actually work for business owners to access funds on a quick basis. So there has been a removal of the 10% penalty for taking money out of a retirement plan before 59 and a half. Not that we would recommend people do that route, but if you need cash and you don't have it and you're closing your doors, it may be an option to take the money out from a retirement plan. You're also, anybody who has a 401k is now allowed to take a $100,000 loan out of that 401k. That's a non-taxable transaction. That money can also then be used to keep the doors open if need be. Something that really doesn't affect you unless you're a business owner over 70 and a half, or you have a friend or a family member who's over 70 and a half, is the CARES Act allowed in 2020 people to stop taking required minimum distributions. We have contacted all of our clients about that, and I would say probably 70% of them have chosen not to take their required minimum distributions for this year, because that's a big tax reduction tool that you can use. And finally, sponsors of defined benefit plans do not have to make their minimum funding contributions this year. So any provider of defined benefits can defer to 2021 to make those contributions. So not really, these items don't really affect businesses per se, but it could be ways to build cash other than taking out a loan. Okay, it was interesting when I looked at the survey, we have 4 people out of all the people who replied who even had looked at applying for the economic injury disaster loan. So either there's not enough publicity about it, or people don't understand it. And we believe that you should be applying for both the PPP and the EIDL almost without exception. There's no downside to applying for both of them. And if you get approved for both, you do not have to take both. So let me go into the program itself. It's designed for small businesses. Actually, this program was around before, and it was specifically designed to allow owners and people living in disaster areas to apply for special money. The president declared the entire country a disaster area, and Congress made enough changes in here to make the loan program something that we should all consider. It's available for employers with under 500 employees, and you had to be in business January 31st of this year. So that applies to the majority of the people that we work with. The maximum size of the loan is $2 million, and they also offer a grant up front. So if you apply for this particular loan, there's a click off box on the SBA's website that allows you to ask for 10 grand immediately. So that's actually a grant part. And the interest rate on the loan is not as good as the PPP, but it's a lot longer. So you can get 3.75%, and they allow you, or they can allow you, not in not all cases, but they can allow you 30 years to pay that back. The reason you might be applying for this particular loan rather than the PPP is it's a lot longer loan. You can pay it back over a longer period of time. And if you are not retaining 75% of your payroll, then this loan is much more appropriate. Now, let's think of a strategy. What if you apply for the PPP, which is actually pretty cool because you get forgiveness for it if you keep 75% of your employees? So let's say you apply for the PPP and you get approved, you get the money, and you instead figure out that I really can't afford to keep 75% of my employees, and you have to let them go. If you've also applied for the economic injury disaster loan, that money can be used to pay back the PPP loan that you unfortunately don't now qualify to get forgiven, and you can pay that back over 30 years. So using these two loans in conjunction with each other, it is a very strong tactic. Now, to apply for it, you actually have to go to the SBA website and apply on the website. You do not go through your local bank. Unfortunately, we had some of our clients who we worked with prior to March 30th. We worked with them, we went through the process, we helped them apply for the loan. A couple days ago, nobody had heard anything. So I got on the phone, reached the SBA, and they said, oh, if you applied before March 30th, you have to reapply. That was bad because now we had to go through all the paperwork again, but it's good if you go look at the SBA website. They've simplified the process substantially, and they're also giving a tracking code to you once you've applied, which they did not do before. So if the 4 people who went ahead and applied for the EIDL before, if you applied before March 30th, you need to go back now and apply again, because they will not consider the loans that were applied before that. With this particular loan, you have to be able to show that you suffered substantial economic injury. And for most businesses, that's not going to be difficult. But if you run a liquor store or a grocery store, in all likelihood, your revenues are up. And so maybe this particular loan would not be the kind that you would want to apply for. The only thing that it's not allowed, you can't use this particular loan for, is to refinance debt that you received prior to the economic disaster that we're going through right now. So if you have a mortgage on your building, you can't use this to refinance it, but you can use it to refinance the PPP loan if you decide to do that. I think that pretty much covers it. Matt, you want to touch on the next program?
Yeah, thank you, Pat. And I'm going to do a couple clarifications on some things Pat said, just to make sure that from how it works with the PPP, the Economic Injury Disaster Loan, that $10,000 grant that you'll get, which you can request the funds immediately, but that gets deducted off of any forgiveness that you receive through the PPP, through the Paycheck Protection Plan. So it's not that you get the 10,000 there and get a completely separate forgiveness. There is a component between the two. The other piece that I want to mention, just for clarity's sake, Pat is correct. If you go under 75% of pay or head count, you start to lose forgiveness. It doesn't 100% go away, but you start to lose that forgiveness. And it's a pretty impactful loss, because the whole idea of the Paycheck Protection Program is to maintain those employees, to keep your employees going. And what they're trying to avoid is for owners to take the money and believe that they can get it forgiven and not pay the people and just pocket the money. So I just wanted to give those two clarifications on there. And I think it was good. So the last program that I want to touch base on when it comes to CARES Act is the Employee Retention Tax Credit. If I go back to the survey, almost 60% of people had said they'd never even heard of the Employee Retention Tax Credit, or what the acronym ERTC. It's a little easier to get out. And the other interesting thing out of the survey is that, and I need to find it real quick, is a number of employees, almost 75% of the people that responded to the survey said that they've only released or let go between 0 and 24% of their staff. So these are two important things to keep in mind as I go through this. So what is the Employee Retention Tax Credit? It's simply a tax credit that is equal to the amount of wages paid, up to $10,000 of wages, 50% of that gets to be applied against your what we call 941 taxes, or the Social Security, Medicare, and federal withholding. Basically what it's saying is that they'll give you a $5,000 credit for any wages paid for maintaining those employees. What is the period? The period is March 12th through January 1st, 2021. The eligibility component is business established and operational in 2020, and that are fully or partially shut down, government mandated. So I don't think that would include this group, because I don't think that there was a partial shutdown within this industry. Actually, I know there wasn't. But the piece of it is, or has had 50% reduction in revenue due to it, and that's where it's important for this for you guys. it's a really kind of basic in that sense. Something really important to understand. You get the Paycheck Protection Program, or you get the Employee Retention Tax Credit. Can't get both. So the first thing you have to understand is which is best for me. And it's currently where there's, for the Paycheck Protection Plan, 300 billion or 259 billion, whatever the number is. I think it's 350 billion initially. There's 55 billion of funding set aside for the ERTC. What I should have mentioned about the payroll protection plan is that we're expecting another 200 billion of additional funding into it. So who should consider the ERTC over the Paycheck Protection Program? I'm gonna go back to my disclosure. This is not all encompassing, but these are the questions I would ask myself. And if I had yeses to any or multiple, I would be doing more research or reaching out to somebody to help you with it. Could be your accountant, could be some internal employees. But if you're an employer who have had revenue reduced to less than 50%, obviously we said that's a requirement. Employers who have laid off over 25% of their employees. This goes back to what Patrick was alluding to that 75%, is that once you've laid off or reduced wages over that 25% threshold, your forgiveness within the PPP goes away. And then employers that expect the reduction in staff to continue post-shutdown. So certain companies, even here, we're not going to see a V curve back up to what the level of services being offered prior. We're going to see a gradual climb. And so if your intuition about your company is that there's going to be continued that reduction in staff, this could be more valuable. And then the number one thing that I really look at, I think is really important, is let's say you're an employer that has lost that 50% of revenue, but all you've done is reduced all of your staff's hours to part-time, but you're trying to maintain everybody on staff. I know a lot of companies that are doing this because you still want them to put food on the table. So you're coming at this as a community approach to getting through it. Now this becomes a really, really great program for those type of companies, because you can take that $5,000 credit across all of your employees that you've gone down to part-time, still manage the cash flow of the business, and still retain those employees. So that's a quick synopsis of the employee retention tax credit, but it's not being talked about right now. The PPP is a shiny object that everybody's talking about. And there is a real math component. I know math's kind of a funny way to put it, but there's a real component here of what's best for you, how much forgiveness, especially if we can couple the EIDL. Is I'd rather get more money forgiven through the ERTC and then get the EIDL than get the PPP and have less money forgiven and owe more money at the end of the day. So that's my quick rundown of the employee retention tax credit.
And an easy way, Matt, to look at this is whether you get the PPP or the tax credit, you should still be applying for the economic injury disaster loan program, because that is not dependent on what you're doing with the other two.
That is exactly correct.
Okay, so there's a number of questions that I want to throw out to you guys, but I saw the PPP application the other day, and it's 2 pages, very simple. How does that compare to the EIDL or the tax credit in terms of applying for it?
Why don't you address the PPP, and then I'll pick up the EIDL.
Well, the PPP application, as Kevin mentioned, is a 2-pager. It is pretty straightforward. There's going to be more of a complexity around the actual calculations. Look, we applied for it as a firm, and what I provided to our bank was 941s for the period, so the 4 quarters of 941s, payroll registers for the entirety of the year. But I also provided them a employee schedule by month of wages, and to show the FTE count, excuse me, or full-time equivalent of employees, but as well as showing them how I derive my calculation. And so that's the part of it. Now, so the application, the paper itself is pretty straightforward. There's a backup document component that is not as straightforward. And by the way, we've done this with multiple banks. Each bank has different requirements as to the backup documentation.
And so, two things. The first is, I've heard people say, very knowledgeable people, I might add, say, if you don't apply to your bank, the bank that you use for your business banking, your application is going to get thrown on the bottom of some other pile. Is it essential that you go to your own bank?
If possible, it is essential.
Yeah, we would require, I haven't spoken to a single bank so far that is willing to process with any degree of urgency any loan that was put in by a non-customer. Now, I haven't talked to all banks, but it's to your bank.
Yeah.
If you, I'm gonna throw there if you can. So I'll give you an example. I don't know if it's still the case, but as of midweek this week, PNC Bank was only accepting applications for their customers that were 5 million in revenue or under. And I had a client that was 8 million, and they wouldn't take their application. And so I told that client and I had found out that US Bank was accepting applications even for customers that weren't theirs. And I recommended, I said, look, you're gonna be bottom of the list. They're gonna take care of their clients first. But if you can't even put your application in, here's a bank to go do it. I've also heard of some credit unions that potentially do it. And if my bank was not willing to accept my application for some reason, I would probably be reaching out to some of the local credit unions. You'd probably have the best bet there in your community.
You know, the other thing that's come up, and, you know, Pat talked about his customer that applied on March 30th and then found out they had to resubmit again. A number of people are freaking out, like, I got to get this done. I got to get this done. What's your thoughts on that?
Well, there's something to be said for that, not because the timeline is short. It's because the money line is short. We have a fixed number of dollars that's been approved. If you listen to some of the banks, they've already gone through the amount of money that was allocated to them. Now, Matt alluded to the fact there may be more money coming, but first come, first serve. Apply now and apply often, and maybe you'll get some of the money.
Follow up to that, Pat. So, you know, our contractors cover a wide spectrum, from guys that have CFOs on staff to guys that are the CEO, the CFO, the COO all in one person, or it's them and their wife. What kind of guidance would you give the less sophisticated contractor in terms of, you know, where do I start?
The EIDL loan is actually, the application process has been made much, much easier. When we applied with our clients prior to the 30th, there was a slew of documents that were being required. The new application process is all online and doesn't require any documents to be uploaded. Now, that's not saying they're not going to come back and ask later on. There's a standard processes. They're looking for tax returns and personal balance sheets. But to get your application in, if you go to the SBA website, it's pretty simple. Now, the PPP loan, the application itself is pretty simple, but the backup documents that the banks are requesting are somewhat incredibly long, but you should be able to get it from your payroll company or out of QuickBooks to upload what the banks are asking for. Don't be scared off because you don't want to fill out the paperwork, because it's not tremendously difficult.
And to add to that, I think, and answer your question, Kevin, if you have a CPA that does your work for your business, that's the first place to start. If that CPA is only your tax provider, is not giving you guidance throughout the year, they should still be able to support. They just may not have all the information readily available. I would also, you guys have a great community, with the regional directors and the other firms around, and I wouldn't be scared to pick up the phone and call sort of some of those mentor organizations that are part of the group and ask the questions. And again, Impact is going to make us available to answer questions and help do some of that stuff for those organizations that just don't have anybody to go to.
And we'll provide the attendees with your contact information if they haven't already looked it up.
And I just want to be clear, we will be providing a dedicated email for that. It's not going to go through me or Pat individually. There'd be no way we'd be able to deal with it. So that will be up and ready to go early next week.
Yeah.
And it's interesting on the application side, too, you actually have to do most of this online. And the business owner is supposed to attest that they're filling out the application. And so when we've helped people, what we've done is we've sat with our client at the computer and helped them go through the questions and help them do the backup paperwork. The owner has to log on and do the application and attest that they're the owner.
Okay. I'm going to run through some questions here that I know I'm trying to hit the fat part of the curve. So I'm monitoring the Q&A as well as the questions that were submitted as a result of responding to the survey. And one that jumps right out is a local union, as an example, is a 501c5, typically labor organization. Where do they stand in the mix of any of these programs?
My understanding is the EIDL, the Economic Injury Disaster Loan, is available to them.
That's right off the bat, right? That's a $10,000 grant right off the bat, right?
Yeah. As my understanding, there'll have to be more clarification because it's where the payroll protection program specifically lists out 501c3s and there's no set aside for C6s, C5s, and so forth. I can say with great confidence, unless with the new stimulus package that, if and when it comes, increases it, they start to include additional organizations, which is possible. Mm-hmm. That it's the EIDL, and when it comes to the employee retention tax credit, I don't think it includes, but I would have to do some more research.
Okay, and we'll have that answer next week. But the right off the top, the EIDL is something that if you're a local union leader, that's the application you should be looking at right now.
Absolutely.
Yeah.
Absolutely.
The worst thing they can say is no.
Yeah, no, I agree.
Well, in addition to that, remember, if you apply and you get approved and for some reason you're not comfortable with the requirements of the loan, you can always turn it down. Right. So if you don't apply, you're not going to get anything.
Yeah, good point. Very good point. And they're feeling the pressure of the situation as much or more than the businesses. Is there any space for Erisa funds in these things? We've seen the roller coaster of the market and they've been damaged tremendously. You may or may not have an answer to this. It's a long shot. Anything?
Well, it's an interesting question, and there really is nothing that addresses the Erisa defined benefit, defined contribution plans that gives any money to them. There are funding, at least with the defined benefit plans, there's funding deferrals. So if you're a defined benefit plan, you're supposed to be making contributions, required contributions into the plan. You can delay those contributions till next year, which hopefully cash flow will be better. Now, unfortunately, if you're underfunded because of the drop in the assets in the plan, there's no provision that we've seen that would cover that.
I have nothing to add to it.
Can you use the funds that you get from either PPP or EIDL or, well, those are the two funds, to pay union benefits if you're an employer?
So simple answer is yes. Your union benefits are going to be part of your payroll cost. So the better question, I guess, would be if those items are part of the forgiveness calculation, because they're not saying that you can use money from a PPP perspective for really anything. It's how much gets forgiven is the big question. When it comes to the EIDL, there's more specific requirements. I would defer to Pat on that.
The EIDL really is a very broad, basically the only disallowment of what you cannot use the money for specifically in writing is you cannot refinance debt that you had prior to the disaster. So you can use the money for anything.
So if you bought a crane or piece of equipment or something, you can't use that money to pay that off. You got to use it for more immediacy, basically.
Correct. Although you can make the loan payments. So you're not allowed to refinance it. You're not pay the loan off, but you are allowed to make the payments on the equipment or your lease or even on your mortgage payment. You can make a mortgage payment. So the money is very flexible.
I'll add one caveat to that. Don't go buying a boat or getting cute with it, because it would not surprise me if there wasn't scrutiny put on all of this at the end of the day, because there's just, with how fast this has been put out there, all of it, it's just there's so much potential fraud that you don't want to be stuck with that possibility.
So I think the next question is very interesting, because we've seen a lot of this because of the nature of the disaster, i.e. people want to avoid getting sick. Everybody on this call wants to avoid getting sick. If some employees choose to go on unemployment instead of working, will that affect your CARE Act application?
The CARE Act application, I'll speak to the payroll protection program specifically. And I do this sometimes. Yes, no. If you replace that person, they're looking at your head count. They're not looking for a one-to-one retention of John Smith or Jane Smith. They're looking at the number of employees that you retain are equal to or more than you had prior to the pandemic. So if you have a staff person, an employee that is uncomfortable working because of health concerns, say they are in a bracket that makes them more susceptible to the pandemic, then obviously you can go back to the union hall and pull other people that would be available if they're available. However, if that person goes on unemployment and you do not replace them, then potentially, yes, it could affect your forgiveness of the loan.
Yeah, it's interesting when you ask that question. I got a phone call from my daughter, and she is facing either a furlough or a 20% reduction in pay if she stays on. And she said she'd be making more money if she got furloughed and went on unemployment, because if she stays on with that 20% cut, she's making less than she would make on unemployment. So there could be people who would choose to leave and go on unemployment. Now, that doesn't affect your ability to get the money, but it does affect your ability to get it for free. And that's really the cool thing about the PPP is you can get that forgiven. The EIDL, even though it's much more flexible, you got to pay it back. It's not forgiven.
Mm-hmm. What are the reasonable timelines for loan/grant approval, funding, and forgiveness? So, I put this thing in, and you guys probably don't have the answer, but I throw it out anyways. I've got people who, in responding to the survey, said, I put it on the 3rd. I got filled in some answers in the meantime. I got verification that I'm good to go on the 6th. I know that's not a universal. Can you just kind of draw on your experience thus far in this short time frame that these have been available?
You want to go, Pat?
No, you go first, and I'll tell what I've seen. So you
Okay.
go ahead.
Some statistics. As of Wednesday, 90 billion had been approved and dispersed from the SBA. So they're trying to move fast. However, the question is, how fast will the banks act? I don't think this is it has been an SBA issue. I think it's been a bank issue. I know of multiple banks regionally and locally that still haven't started the application process, even though they received the applications over a week ago. So the answer really comes down to your bank. And I would recommend that if you've applied or when you apply, don't be a nuisance, but touch base every day and ask the question: Has it been applied? Has it been my application been sent to the SBA? If not, when could I expect that to happen?
Okay.
I've only seen 2 people who've actually received their PPP money, with all the people who've applied, and we have seen nobody approved for the EIDL loan yet. So even though this is supposed to be something that's supposed to give us cash quickly, it doesn't appear like that's happening. And if you have a good relationship with your personal banker, there's a better chance that you'll get the PPP loan put through. In fact, from a time frame standpoint, the reason you really should be applying for both is our feeling is the PPP will get you money quicker. And so if you get that money quick and then you get the next loan approved and you don't qualify for forgiveness, you can always pay off the first loan, but apply for both, hoping one of them will come through quickly.
So if there's nothing else that someone should take away from this webcast, it's apply. Apply now, apply for both, apply for anything you can get. I heard this, I'm going off script here a little bit, but I've heard it where people say, you know what, they put in the application, they attach a bunch of crap and keep their fingers crossed. Good strategy, bad strategy, or you don't know?
I can answer this a little bit. First is yes, apply. The one thing that I'm suggesting to people is I've had some clients and some people I know apply for the PPP at different banks. I would not do that. I think you're going to cause more problems for yourself in the long run.
Okay.
But apply. So yes, completely. An interesting part of the guidance that came out earlier this week was that the SBA told the banks that they did not have to technically verify the loan calculation, and that the loan calculation had to be based on the information that was provided at the time of the application, which is a way of saying that if somebody applied on the first day before the guidance came out and included 1099 contractors and received their money with the 1099 contractors, technically that's okay.
And we've seen some banks asking for material that doesn't even apply to a particular business. And so our recommendation was upload a blank form there, because you got to get something in, because these are all web-based. And when you apply on the web, you got to fill everything in to get it to move to the next step. So yeah, apply. I don't know if I would say apply with superfluous information, but do the best job you can to put the stuff together.
Okay. Volume's down, but we have some essential work for water treatment facilities and refinery work still going on. Will this program help us? I think I'm going to answer this. Apply anyways, whether you think it'll help or not.
And it will help. We don't know what the percentage of their revenue is associated to that type of work. And even if the loss in revenue, but apply for the PPP, we don't know what's going to happen. The one thing I have to say is this could go till the end of May. This could go into June. we could be having different social distancing and economic impacts that go all the way through the end of the year. We don't know what it's going to be. Our job as business owners and business leaders is to keep the doors open, so when it does turn around, we're there able to. And that's the main goal of everything that we're talking to clients. Why we're on the phone with you guys now.
This, I think, is an easy one. When iron worker gets unemployment benefits, are they going to get the $600 kicker?
It's available for everybody who applies for unemployment.
As long as their state government is on board with it, correct?
Correct.
So the governor or the legislative body in the state has to be on board or endorse the program, and then they get the extra $600. I'm not going to editorialize. Trying to get my bank of 27 years, Wells Fargo, to accept my PPP application.
They ran out of money.
They didn't run out of money, exactly. There's no technical amount that banks are assigned for the PPP. However, Wells Fargo was under restrictions based on I forget exactly what it was a year or two ago.
Yeah, it was a big scandal. Yes.
Yeah. So they had a credit cash limit requirement, liquidation requirements. They accept applications up to 10 billion, and they hit that credit, and they said we can't do anything more. So any companies that Wells Fargo has as a bank, if you have a relationship with another bank, let's say a credit card relationship, let's say I would even start looking at some of the personal relationships and ask if you can be accepted under those duress situation.
Okay.
Well, and most banks are also capping the amount of money that they want to actually handle in this situation. So you will run into other banks other than Wells Fargo coming out and saying, hey, we ran out of money. Whether they mean they ran out of money or they're not willing to take any more applications, that's going to happen. Once again, that's why we recommend apply as soon as possible and get a hold of the banker you're working with. That's your best ally for the PPP.
Gotcha.
And what Pat's really talking about is credit or capital rules. Even though the Congress lowered those rules for the banks are in business for themselves, and they're not taking the additional risk.
Here's another one, and I think this is self-evident. You spoke on it earlier, but the applications are found at sba.gov.
Yes, and we can send out the actual link to get for the EIDL. The PPP loans need to be done through your bank, the bank that you're working with currently. That is not, the loan itself is not, you can't apply through the government site. The government site is for the EIDL loans only. You can get the application for both there, but the PPP application does you no good unless you have a bank connection.
Gotcha.
And there is a copy of the PPP loan at SBA that you may have to, depending on your bank. So Bank of America, they have an online system. TD Bank has an online system. Many of your regional banks will have an online system to apply for it. Some of your more local and community banks that you're banking with don't have the resources to build an online system, and they're requiring that you download the application of the SBA and submit it to them.
Okay, great answer. I think you hit on this a little bit before, but just to reiterate, the question is: applied for the PPP loan already, but not perfectly clear on what money spent versus what money can be forgiven. Even our local bank is not perfectly clear on the details.
And nobody is.
Okay.
But I'll give you one example. I have a question mark. I'm not saying I'm right, I'm wrong, or indifferent with this. But part of what I read made me question whether federal withholding, Social Security and Medicare withholding is going to be included in the forgiveness calculation. It's a gray area. No guidance has been given. I can tell you with certainty that anybody that tells you is making an assumption and most likely will be wrong at this point.
What type of documentation do you think people can start collecting right now as a result of hearing you guys on this webcast?
Simplest set of information for the PPP. Get the 941s for 2019, your Q1 through Q4 941s, your 940, your payroll register reports, so basically your per pay period reports. And that's going to be a big chunk of the backup documentation that's going to be required. Then include a payroll for the period between February 15th and March 31st. The reason is that they want verification that you were in business at that time, not just last year. Okay. Obviously, you want to do the calculation, but those are the backup documentations that are most common.
Yeah, we've also seen a few banks requiring copies of actual bank statements showing that the payroll was withdrawn from your bank.
Okay.
Now, on the other side, on the EIDL loans, currently the website is not requiring any documentation, but the actual withdrawal and the actual loan process is going to be looking at tax returns, business and personal as well. And this is one area that a lot of people run into difficulty with, is a personal financial statement, including a complete listing of all real estate holdings and debt on that real estate. Now, that was the requirement prior to March 30th. So when we helped the clients do the loans at that point, that was all uploaded. The new process doesn't ask for it on the website, but we've got to assume there's going to be some documentation that will be needed. And so tax returns are sort of easy to pull, and then you need to build a personal financial statement. Okay.
Excellent advice. Is there any special treatment for MBEs, WBEs, DBEs?
I have seen no guidance on that. I believe this is a sweeping maneuver for all businesses, whether minority owned or not.
We only have 2 people left. Are we still eligible to receive any of this money?
Yes.
Yes.
Apply. Keep applying. Let's see. Rules regarding future layoffs. If we run out of work and we have to lay off iron workers, if we run out of work, can we lay off iron workers if we receive the loan? So we're working iron workers right now. We've applied for the loan. We've gotten money. We have to lay them off in the future.
Let me address that, because this goes where we're using the 2 programs works well together. Apply for the PPP. It's probably the quicker money to get. You receive that money. If you don't lay everybody off, or you keep 75% of it, the people, you're going to get some of that money forgiven, or maybe all of that money forgiven. At the same time, apply for the EIDL. That allows you a much longer time to pay the money back. So if you then have to lay people off, you don't qualify for the forgiveness, and you don't want to pay the loan, the PPP back in the very short period of time that you're given, then you can use the EIDL money to pay that PPP back, and you have 30 years then to pay that money back.
Another tactical question, and we had heard that if you're a QuickBooks Online user, there's some portal or method where you can apply for this money through QuickBooks. True, false?
So the answer is I'm unclear completely. I heard 2 different things. One was they provided the calculation for you if you were on QuickBooks Online. And one was that you could actually submit the application. I'm going to err on the side of conservative and say they're willing to help you prepare the application, but you still have to go to your lender.
Can payroll taxes paid by the employer count towards your forgivable loan amount?
Unclear.
Okay.
Answer is, if you're thinking about your FICA match, Social Security and Medicare match, most likely not.
Okay. All right. Let me run through some of those were all questions that we got from the survey. So let me run through some of these questions that we got online here. For union employees, are the pension and annuity benefits included in the calculation for the PPP loans? And is this part of the $100,000 cap?
Two separate questions.
Yes.
The $100,000 cap only is associated to wages. So when I have let's say you have somebody that's making $150,000, their gross salaries is $100,000 now for the calculation. But if there was a 5% contribution rate to it for retirement, just as an example, you would use a full contribution up through the 150 and the benefit side. So the union dues, I would take as a separate bucket, and those benefits would be a different line in your calculation, and you would use them.
Okay. Will this be available if we've already laid off employees and need to bring them back?
Yes.
Yeah.
Okay, good. We already talked about whether local unions qualify for PPA. The answer is apply universally, right?
The local unions themselves, which are 501c5s, I would apply for the EIDL, as Pat had mentioned before. I do not think the PPP is, and I should say I'm pretty confident the PPP is not available.
Yeah, because it's 501c5.
Yeah, and that's so. As Matt mentioned, though, we're liable to see something new coming out from the another bill because the money's running out, quite frankly, and they need to put more money into the program. They may correct some of those oversights as we go forward.
I know that the U.S. Travel Association is lobbying strong right now for 501c6s to be included.
Right. I've seen that on association websites and blogs. So if you avail yourself of the $100,000 out of your 401k with no penalty, that's a loan. What are the payback terms? Do you know?
The payback, you would pay it back. Basically, you pay it back to yourself.
Right.
So as the money it's taken out of your paycheck, and I'm not sure they've clarified exactly how many years you have, but it will be over multiple years that to pay it back, and the interest that you're paying on the loan, basically you're paying it to yourself. So it's probably a best way to get quick cash if you've run out of cash. Okay. Now, if you don't pay it back, it will become taxable income. So you really have to pay it back at some point in the future.
This is your expertise, Pat, though. But what is the key here is that there's not that penalty associated, even if you have to pay the income tax on it.
Well, actually, this is actually a different program. You're correct on the if you withdraw money from an account directly, not as a loan but as a withdrawal, there's no penalty tax. If you do the loan, there's no tax and no penalty. So it really works very well for quick access to cash.
Okay.
And on that point, I mean, even early on, we talked to our clients heavily about up your line of credits before everybody's trying to do it. Go and get home equity line of credits. You know, if you have a concern that cash is going to be necessary, it is easier to get it when other people aren't trying to get it. And especially with line of credits where you're not paying unless you tap into it, it's just smart planning to have it ready to go. Even before this pandemic, me and Pat were very, very we always talk to clients, try to get a line of credit equal to no less than 1 month of revenue.
And as another comment, and this may be a bit panicky, but I remember 2008, 2009, very much so in the business community. And a lot of banks came in at that period of time and restricted or closed our clients' lines of credit. They said, look, we're not going to let you take any more money out. So what we've told people is to consider drawing on your line of credit, putting the money into one of your operational accounts. Yes, you're paying interest on it, but your line can't be closed while you have that money out. So is that a bit reactionary? Probably, but it might, who knows? We're in uncertain times at this point.
Yeah, gotcha. Has a date been given for disbursement of the EIDL loans, or is it? Yeah, go ahead.
It's supposed to be underwritten right away and paid out as soon as possible, but to date, we have not seen any funds dispersed to any of our clients.
Okay. The next couple of questions are relative to local unions and the PPP, which we just addressed a few minutes ago. As it stands now, they would not qualify. However, the recommendation from you guys is to apply, particularly for the EIDL. If you're
Correct.
Correct.
And
the EIDL, they could potentially get that 10 grand straight away.
we're not fans of doing it, and we didn't talk about it in this, but if any unions get in a real bad place, there is the payroll tax postponement in 2020, due in 2021 and 2022. So, there's some things to look at if cash just gets really tight.
Can you get the $10,000 grant without availing yourself of the loan?
For the EDIL?
Yes.
No, you have to apply for the loan.
Okay.
But you apply, and then once you get and tell me if I'm wrong, Pat, you apply, once they confirm that they received it, you can request that 10,000 immediately. They give you that before the loan ever comes out.
Well, there's actually on the last page of the SBA website, when you finish going through the whole loan process, there's a little box that says, give me the 10 grand. And then you're supposed to put on your routing number and your bank account number. And in theory, that 10 grand should be dispersed immediately. But that's the theory.
Is it possible to receive both the PPP and the EIDL?
Yes.
Apply for both. What can you use the EIDL funds for?
Almost anything other than paying off financing that you had prior to the disaster hitting, but you can use it to pay for the actual monthly payments. As you alluded to earlier, Kevin, if you bought a piece of equipment, you can't pay the equipment off, but you could make the monthly payments on that equipment with the EIDL loan. So the EIDL loan actually got much wider things that you can use it for. Although the PPP is quite flexible, you just won't get forgiveness for it unless you pay your payroll with it.
Could you guys speak to guidance of which loan to apply for? And we've said it many times, apply for both of them. But when contractors that don't have steady employees during a regular year, i.e. their projects ramp up and down, let alone during this pandemic, as far as retention of 75% pay/employees?
It's a very, very specific question, and I'd want to do a little bit more digging into the specific situation. There could be a value in the ERTC over the PPP, depending on how that looks. The PPP has a look back from a head count perspective. So for an organization like that is in flux in general, the look back period could just be a bad timing. So that's going to be very specific, and I don't want to give bad advice.
Okay. When applying for PPP, what dates, what date or dates are used for the FTE count, full-time employee equivalent count used? So what ranges?
So it's on the calculation date range. It's a 12-month period. The guidance provided 2 periods you can use: calendar year 2019 or your last 12 months as of 3/31/2020. So basically 4/1/19 through 3/31/2020, or calendar year 2019.
Okay.
The
And
way that I calculate FTE, quite frankly, is I take the number of hours paid, divide by 32 hours per week. It's like 1,660 hours per year to get an FTE equivalent.
let's see, there's a good question here. Does that mean that local JTCs, that's the local union training centers, are not able to acquire any of these credits?
I'll jump into this because the training centers, there was a different question. Let me first say that the CARES Act was a $2.2 trillion or $2 trillion act. And they've been really focused on the guidance around the Paycheck Protection Program. And there's a lot of other things that are not exactly defined well. I have an article up that talks about the fact that training centers will have grants available to them through the SBA, I believe. These grants are part of the entrepreneurial development programs that they had previously, but they're waiving a match to the grant, meaning that the organizations do not have to find matching dollars. But my understanding is that the training has to be adjusted to or include things specifically around training around the COVID prevention, social distancing, things like that. Let me read something here. The grants specifically are for educating businesses on 4 topics: assessing federal resources relating to acquiring capital and general business resiliency, the hazards and prevention of the transmission and communication of the virus, as well as other diseases, the potential effects of COVID-19 on the supply chains, distribution, and sale of products or covered small business concerns, and the mitigation of those effects. So it's really saying, yes, training centers, there's going to be dollars, but make sure that you have to incorporate these types of things into it. I do not have a gauge of what the actual dollar amounts are going to be or how the application process is set up.
So suffice it to say, there are other resources out there that they can use to get them through this time.
Yes. The training centers, you can't do the PPP, but I could do some more research around the ERTC. There are, if you're having any paying any sick time for people that contract COVID or believe they have it. There's some other payroll credits around sick leave.
Well, that's going to be huge. I'll tell you that.
So, especially because training centers in this instance with essential businesses are front and center of potential infection.
Okay. Can you touch on the calculation on how much you can borrow on the PPP?
How can I do this simpler than I did it before? If from average monthly payroll, let's just say, and this is not going to be exact, but if you want to do a back of the envelope, I'm not even worried about benefits. I'm not even worried about anything else.
You want me to say it very simply?
Yes, please do.
Very simply, you take your last 12 months of payroll, divide by 12, and multiply by 2.5. Now, there's little idiosyncrasies in there. You got to take certain things out and add certain things back in. But 12 months of payroll, divide by 12, multiply by 2.5.
I like it.
Good answer, Pat. Borrowing from your 401k, is there any restriction on what institution holds your plan? or is it just a universal?
No, it's not. There's no restriction on the institution. There could be a restriction if the plan does not allow loans, but that would be very, very rare. So you would check with the administrator of the plan, and as long as the plan allowed loans, and like I said, I hardly ever see a plan that won't allow a loan, and then they'll process the loan for you, and you should be able to get the funds within a few days.
Okay. This is a very interesting and specific question. For a contractor that was already on a payment plan worked out with the trustees and through no fault of their, so they're on a payment plan to catch up on their fringe payments with the local union trust, if I understand this correctly. And through no fault of their own, their jobs were shut down. How can they expect to stay current with their payment plan? And can a loan be applied for in this case? I guess either one of the loans could potentially benefit them.
Yeah, they could apply for the loans, and again, it's not so much you're using the loans to pay that, but you can use the funds to pay those back, and then it's whether it becomes forgivable or not forgivable for PPP. My other question, would be is have you contacted the trustee of that and see if they've instituted any programs themselves? Because I can't imagine they're the only ones going through this type of thing.
Yeah, got it.
There are certain questions on both the PPP and the EIDL about delinquencies. So this is specific enough that I would not feel comfortable answering this without knowing more specifics.
Yeah, that's a very specific question. If you lost money last year on your corporate tax returns, will that affect these loans?
No.
You still apply.
You can still apply. However, we'll be discussing between the leadership of Impact and myself and Pat on whether we're going to do a specific tax webinar for you guys that goes over some of the things in the CARES Act that can affect the tax planning component of the businesses. Again, we haven't discussed in full what those webinars are going to look like, but there's a whole another component to this CARE Act that affects tax related items when it comes to both businesses and individuals.
Okay, I think this is a really good question. Should we take advantage of employee retention credit, and which employees of the hall, i.e. the hiring hall, the local union, are covered for this? Is it just for the admins, or would it cover the business agents too? Are we eligible to take this retention credit? So you're a local union and you realize you're not eligible for the PPE or PPP at this point. That may change, could change next hour, and you pursue the EIDL. Can you use it for the admins, the agents, or other employees of the local union?
Well, I think, was it the ERTC that was being, the employee retention tax credit? Was that the specific?
Yes, it is. You're right.
Okay. I have something up here. My concern is the eligibility on whether the unions fall into the eligible component for the ERTC, which is not completely clear to me at this point. I'm going to do if they can qualify for the ERTC credits, then yes, as long as the people are on W-2 and they've reduced revenues by that 50% or been shut down, that it doesn't matter who the employees are, they would qualify. Now, again, you have that max credit of $5,000. That is a association of 50% of salary, but it does not limit the type of employee.
Great. Pension and annuity benefits should be included in the calculation for PPP in the $100,000 cap? Question mark.
Not really.
Just on the check?
Well, when you subtract out the amount over the salary amount over the 100K. So somebody makes 150, you can only count the 100. But you're able to count the full contributions to pension and full contributions to benefits,
Okay.
health insurance, and maybe you're providing some life insurance or disability or whatever.
So the answer, as I understand it, is yes, you would include them up to the $100,000 cap.
Think of it this way, the calculation should be broken up into your gross salaries and then your benefits. And there's no tie in between the two of them.
Okay.
Except for, well, I should say except for, caveat being it is employer paid. Do not include any employee deduction portion of it.
Okay. And then we got a similar question about penalty on withdrawing from the 401k. I think we answered that. Do you know of any information, any organization that received the CARE grant? Do you know of any organization that has received the CARES grant already? There's a lot of them, are there?
Right, the PPP or the EIDL. PPP, we've seen a lot of people get the money. Maybe not a lot, but a number of people get the money. On the other side, on the EIDL, we have seen nobody get the money yet.
Okay.
At least in our group.
Okay. All right. Says, got a question. Their local union doesn't have a 401k. They have annuity, which I believe is an equivalent of a 401k. I'm not sure. Does the same rule still apply? An annuity and a 401k?
The answer is it depends on how that annuity is classified. So if it's, you would have to go back to the administrator and say, where does it fall under ERISA? And if loans were able to be taken as an ERISA plan with loans, then it would fall. But that's a specific enough question that that's something that could be addressed to us directly so that we could answer that.
Okay. Well, for right now, that exhausts the questions. Before I cut everybody loose, we had great attendance here. And I want to express on behalf of General President Eric Dean, who sent me a message, as well as Bill Brown, the management co-chairman of Impact, and both the ironworker leadership and the contractor leadership of Impact. Really appreciate you getting on here. And certainly we will benefit from this information, and we'll keep everybody apprised of the follow-up, more specific how-to webinars that will be shorter next week. And for the Canadian members and contractors that are on, we're going to track down someone who can supply similar information on both Canadian federal and provincial programs as well. But Matt, Pat, thank you very much. Thank you to Tim Strecker and the Ironworker office for helping with all the IT information. Really, really great information. You guys get the two closing words. Pat first.
Well, thank you, Kevin, for having us. We're here to help. We will have a specific email out that you can address questions to, and everybody stay safe.
Okay. Matt?
Thank you, Kevin. One thing that we didn't mention in any of this, I want to really push is every state has grants and other programs that they're doing. Maybe I shouldn't say every state, but a lot of states and also local counties. We are not,
right.
And local counties, and we are not keeping up with each state and each county, quite frankly. But I would do the research. I look at that and see what else is available there. Use what's available. But other than that, yes, please stay healthy. We really appreciate you guys taking the time. Hopefully this was helpful, and we'll continue providing information as quick and as well as we can.
All right. Thank you guys very much. Everybody be well. Happy Easter. And if you don't celebrate that, have a great weekend.